Are you in the process of purchasing a home using an FHA loan or a VA loan and finding it difficult to get the seller to accept your offer? Well, in a recent survey of agents conducted by the National Association of Realtors, nearly 89% of sellers would consider an offer if it was conventional financing, but at the same time, only 30% of those sellers would consider an offer if it was FHA or VA financing, and 6% wouldn't consider such an offer at all. And during the same time, the number of FHA and VA loans as a market share is declining. From 2017 to 2020, FHA loans made up about 22.5% of loans in the market, whereas right now it's under 19%. And during that same time, VA loans 11.5 or so percent, and that's dropped down to 10.3%. So the number of people getting loans using FHA and VA is declining. Now, that could partly be due to rising prices. FHA has loan limits on how much they'll lend, so that definitely could be a portion of it. But there's also other reasons that sellers don't want to consider FHA and VA loans. And in today's video, we're going to look at a survey done by the National Association of Realtors that touches on the items that the sellers are most concerned with. And the reason we're going to bring these up is so that if you're making an offer using an FHA loan or a VA loan, you can address these maybe up front as part of your offer, or have your agent address them with the agent on the other side, just to move past them, right? Because in this market, it's competitive. A lot of times you have multiple offers. So how can you stand out? Well, you can stand out by knowing what the sellers are worried about in a lot of cases. And this survey is going to give you those items. We're going to touch on each one of those to help you better understand what they mean. Whether you agree with them or not, it's what the sellers are thinking, and I think it's important to know that. And at the same time, we're going to take a look at my multiple listing service to see how many loans had closed using FHA and VA financing over the last 6 months. A lot of viewers have asked for this information. We're going to take a look at it. We're also going to talk about an offer that I recently accepted representing a seller that was an FHA loan, why we chose that offer. First, I want to pull up this survey from the National Association of Realtors that touches on these items that are concerning sellers. Now, the first thing you see on this list, and it seems to be the biggest concern of sellers out there for both FHA and VA, and that is a stricter home inspection. Now, there's a lot of misinformation out there. There's not a separate inspector. An appraiser goes out to appraise the property, and that appraiser also does an inspection while they're at the property. What are they looking for? They're looking for lead-based paint. They're looking for, roof leaks. They're making sure there's no active issues with the property that might hurt a potential buyer buying that property, that a costly item, right? They're checking appliances, like the lifespan of appliances, water heaters, just to make sure there's no issues going on. They're not there to do a full inspection. They're not checking, electrical. They're not checking plumbing in most cases. They might be looking under a sink, but they're not going through an active inspection like a home inspector. So just keep that in mind. So if you're buying a property that has a bunch of issues, then chances are FHA and VA financing is not going to allow it anyway. But, if there are some items in the property, then that might be something that you address up front with the seller, to get them to consider your offer. Now, the second two items that you see here are both related to the appraisal, the contingency, as well as worrying about the home not appraising. One and the same for the most part, but FHA and VA have something called an amendatory clause that is part of the real estate purchase agreement when you submit it to a seller. And it basically says they don't have to purchase that property if the appraisal comes in less than the purchase price, right? That essentially, they're going to buy the property for what it appraises at. So in this market where it's highly competitive, people are offering above the asking price in a lot of markets. Sellers are concerned that if the appraisal comes in less, that deal may fall apart, and they don't want to go into escrow with a buyer that can't close. And also, if the appraisal comes in short, they want to find a buyer that's willing to make up that difference in a lot of cases. And in my experience, FHA buyers, typically have less down payment, and a lot of times don't have the extra money to cover that potential appraisal gap, and therefore they don't want to consider it. The next thing you see here is a longer time to close. Now, I don't really feel like this is fair, but this is something that can be addressed up front by having your lender call and verify, with the agent on the other side of the time frame in which you close. But, I'm recently had an offer that we accepted, which was an FHA offer. And part of the reason that we accepted that offer is I knew the lender on the other side, right? I knew the lender, I called the lender, gave me assurance that there wasn't going to be any issues, no issues closing within 30 days. And we accepted that offer because I knew the lender on the other side and knew, they had a good reputation, knew it wouldn't be a problem closing. And that's why we considered accepting that offer, right? And so I don't think the longer time frames is really a concern in this market. If your lender can't close an FHA loan in 30 days, you need to find a new lender. I mean, that's what it boils down to. Last two things are things that I hear all the time, and that is the lower down payment, right? FHA has a 3.5% down payment requirement, whereas VA doesn't require a down payment at all. Sellers often frown upon this, especially in a situation where they have multiple offers, somebody putting 5% down, 10% down, 20% down. The person putting the least amount down typically looks like they're less qualified in most cases because they're putting less down payment. So, that's not always true, but, that's how sellers look at it. So just keep that in mind when you're making an offer. Sellers often look at your offer, as you're not as qualified as somebody with a larger down payment. So you have to consider how the seller would look at it, especially if they're in that multiple offer situation and you're up against somebody putting more money down. The person putting more money down looks like the more qualified candidate in that regard. So lastly, the earnest money deposit. This is, the amount that you put into escrow, when you purchase a property. It's your good faith deposit, if you will. Typically speaking, sellers want to have some assurance that if you back out after the contingency period, that they're going to, not have wasted their time. And so they want to see larger earnest money deposits. In most cases here in the state of California, a lot of sellers at this time are requesting a 3% earnest money deposit. Now, that money is not their money until the contingency period has been released, but they want some assurance that if that deal falls apart after that period, that they're going to get something for it, that they haven't completely wasted their time. So if you're in the market, you're using FHA and you have those funds, you're going to need that 3.5% down for the down payment anyway. Maybe you max out that earnest money deposit up front to help your offer stand out, and that way it's not a concern for the seller. Now, the next thing we're going to look at here is my multiple listing service. We're going to take a look at how many loans have closed in the last 6 months using FHA or VA financing. And that's what we have right here. So now I've already gone in and put in the criteria, which I mentioned earlier. We're going to look at the last 6 months. We're looking at all of Orange County here, and we are looking at properties that are FHA and VA financing. Now, you see here there's 896 matches during that time. So in the last 6 months, we've had 896 properties close, or at least that's the information that's input, right? This information is only as good as the person that input it. So there might be some misinformation in there that people put in the wrong type of financing, but we're going to assume that it's correct. But out of that 896, 502 of them were FHA loans, whereas the remainder, 404 were VA loans. So let's go back and we're going to select both here, and we're going to take a look at a couple of things. The main thing I want you to see is the average days on market, right? So there's been 897. So it looks like 500 of those were single family homes, whereas the remainder were condos. So the other 397 were condos. But more importantly, let's take a look at the average days on market, because I think it's important to know what you're working with in this environment to see, what you need to do in some cases in order to get your offer accepted. Now, this clearly isn't right. So let's go back. We're going to select all, which we didn't do initially. And we're going to go down and we're going to select the data. So 897 properties, as you see here. The average days on market, 21 days. The minimum, 0 days. The max, 235 days. Now, it says the least expensive property that sold during that period using an FHA or VA loan was $272,499. Shows the max at nearly $6 million. Clearly, that's either a mistype on the price, or somebody put in the wrong type of financing there. So that's not accurate. But the average days on market was 21 days. So that means, properties are sitting a little bit longer, in most cases on average, and getting those offers accepted. So if a property just comes to the market now, you might be in a little bit tougher position in order to get your FHA or VA loan accepted, especially if it's a multiple offer situation, right? If you're up against a lot of people, might be a little bit more difficult. But if the home has been on the market for a little bit, then you might have a better opportunity to get it accepted, because there is less competition during that time, maybe not as many offers, and the seller is wanting to sell that property. Therefore, they're willing to consider that offer. So just know, if you're using FHA or VA financing, you might look at properties that have been on the market a little bit longer versus just coming on, in order to help your offer stand out. But as I mentioned earlier, it's also about working with a professional agent as well as a professional lender. They can help guide you through that process. If you need one, there's a link in the description below. Click that, and I'll refer you to somebody that I personally know that does a good job, works like I do, that can guide you in the right direction. Now, don't think it's impossible out there to get an FHA or a VA loan accepted in this market. It might be a little bit more tough, but know that having a professional on your side doing their part is going to help you get there. And just being patient, right? Being patient with the market, maybe not getting caught up in the FOMO of the market, and just waiting for the right opportunity to present itself. So I hope this video was helpful, but if you do have additional questions, additional comments, do me a favor, leave them below. I'll continue to update you on FHA loans and VA loans as we move forward. But for now, I appreciate you taking the time to watch. I appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.